Welcome. Glad to see you.
There you go.
Very good. All right. Why don't you go ahead and tell us a little bit about yourself?
Well, the name is Ashok. My wife's name is Anu, and I graduated from India in marine engineering from DVD, and then I sailed all over the world on large ocean-going ships for about 13 years. My wife sailed with me for about 3 years. She was on board too,
Hmm.
and
Is that
later
where
on,
you
I
met?
was the chief engineer. Later on, I was the chief engineer on ships. Then, after sailing career, I moved over to Hong Kong. I was working in office, managing the same ships. And then in 1992, I moved over to States. Worked here in oil and gas in Houston, senior positions. And then later on, I ran a shipyard in Tampa, Florida. And then from there, I moved back to Houston in 17. I'm kind of presently semi-retired.
Wow. So you've like had some very worldly experiences long before you got the lifestyles, huh?
Oh, you bet.
That's
Yes.
very, very cool. So what, I mean, traveler of the world, done pretty much a whole bunch of cool stuff. Why did you join lifestyles?
Well, I was, financially, I was doing quite well. So they didn't have issues in that respect, but I was heavily invested in the stock market and things. I did have single family properties and some land, etc. And I wanted to kind of diversify my investment more into real estate, into multifamily and things like that, so that, kind of have a little bit diversified portfolio. That was one of the reasons that I joined Lifestyle.
Did you have those single families and land before lifestyles or?
Yes, I had them before I joined Lifestyle.
Okay,
I
very good.
have a few homes in KT area. Those are large homes serving a specific market, like I mean high-end market.
Very cool. All right, very good. So what property are we going to talk about tonight?
Well, we're going to talk about I have a property IRO deal, which is 20 units. We call it Laurel Place Apartments. It's based in it's in LaMarque, Texas.
Okay. And those people that are not really from Houston, LaMarque is southeast of Houston. It's all almost between Houston and Galveston on the coast. So
Right.
very cool. All right, so you purchased this in 2018. Let's go
Yes,
through the highlights real quick.
Yes, so I purchased this is 20 units built in 1974. I purchased the property in 2018 from a lifestyle member only, and price was like 1.054, 501. It was like 52,725 per unit.
Okay.
And
So two things you mentioned. One, this was a fellow lifestyle member that you purchased this from, right?
right,
Really? So very good. So we do a lot of that inside lifestyle. We'll have owners that are ready to, they have something, they've recognized some gain, they're ready to move on to something else, like a bigger property or divest or whatever the issue is. And we have a lot of transactions where we'll have preferred member to preferred member. So it's really, and it just kind of keeps going up. I mean, we have some properties I think that's changed hands like 5, 6, 7 times. It's crazy how that works. The other thing is, are you sure that this is correct, the number that you purchased at? Because I think it was a couple cents higher, wasn't it? Or no, it was 62 cents.
take a little bit here and there.
Plus
And
or
engineer
minus.
always tries to put the right numbers, dots.
We definitely got the right numbers in there, I'm pretty sure. All right.
Really quick, people. Is my microphone on? This
Yeah.
this is important because Lee just mentioned this earlier about the type A versus the type B that are very meticulous. So he has it down to the 62 cents. So when I talk about a type B, that is your definition of type B. He'll be monotone the whole night. He won't get excited, even though he makes great rates. Just the way they are. So Lee, my question is because he bought this by himself. He came up with 300 grand. What about people out there that don't have 300 grand? How on earth could they do this, a deal like this? Could you explain that to them?
Yep, that's what they call a syndication. They'll be like, for example, if Ashok decided that he wanted to, syndicate this deal, he could have gone out and asked for partners, and he would have to put a certain percentage down of himself money, and then basically he creates like a partnership, a single LLC, and have other members invest with him. So, and then we can do that for as little as like, some leads will bring in like 25,000. per person. Some people have a little bit more than that. So, I mean, even with $25,000, if you didn't want to buy a single family house, you could invest in a multifamily partnership and you get the exact same gains, the exact same return, the exact same tax benefit as you would if you were doing it on your own.
So you heard what he said. So remember, there's people watching from all across America, California, Hawaii. Members, now this deal is different. He bought it by himself, and this is a great plan. Maybe you want to buy one by yourself. That's called an IRO. We'll teach you how to do that. Some of you just want to invest with someone else. So it doesn't matter if you're in California, you could invest in this deal here in, Houston, Texas. So I just want the people knowing it doesn't matter where you live, you can do this from anywhere. I just want to make sure they understand that when they're watching, that you don't have to buy them by yourself. That's not the only way.
Right. So Ashok, how come you didn't take partners on this deal? Why did you decide to do it yourself to start with?
Well, I had the finances, and I prefer to play with my money than others' money. So and I was not too keen to do, to be responsible to a lot of other people and do things. If it's my money, I can do what I want to do. If I have other people's invested, then I got to answer questions which I don't like to do. That was not the intent of mine.
Right, and we do, and that is a thing. When you do a league deal or you do a syndication, you are answering to other partners. You are answering to people every question they have. You're working for them. So in this case, you're an individual deal. It's all your money. So basically, between you and your spouse, y'all are the one you have to answer to her. Basically, probably most of the time.
You have to answer her.
That's right.
Exactly. So it's a lot easier to, if you have a problem, you come and ask the operation consultants or your mentors, and you still have access to everybody the same way that the lead groups do. But in this case, you're all decided to do yourself. So, all right. So you came out of pocket for this about 300 grand. You had that yourself. We're going to get into the details of this in a minute. So on the financing, you actually financed this. You got a loan. The difference between the purchase price and the financing is the part that you had to put down and some additional closing costs and things like that. So you got a $740,000 bank loan at 5.5%. Now, I just want to explain to people a bank loan this was called a recourse loan, basically, right? So the difference between a non-recourse and a recourse loan is on commercial properties. Sometimes we're allowed to take out a loan that just basically the property supports it. So the bank will give you a loan and say, well, you're fine. If something happens to it, you're not on the hook for anything. That's non-recourse. A recourse loan is just like when you buy your current property, like you buy your house and the bank gives you a loan, but if you don't make that note payment, they're going to come and foreclose, and you're responsible for the difference to pay back that loan no matter what. Now there's some caveats, but this is a bank loan at 5.5%, and you got this back in 2018. So actually 5.5 was a good rate back then, and it's actually kind of seems like a little bit high where we're at right now, but I give you probably 6 months to a year, it'll probably be a pretty darn good rate again, obviously. You also had built into this thing, you thought you were going to have like $40,000 worth of rehab to do on the property. That was in the loan as well, or you could have gotten financing for it, but you elected not to do that, right?
Right, but that 40,000 is in addition to 740.
Okay, very good. So you got a total of a credit of 780. Very good.
Right.
All right, so next slide, please. All right, so let's go over the current, what you're doing currently as far as income and expenses wise.
So my income is gross rental income is about 16,000 a month, and
Okay.
And then expenses about 6,000 a month, and my NOI is around 9,600 a month, and monthly cash flow is about 4,500 per month for 2021.
Very good. So for the people that are new, that you're going to learn in the 2-day, when you go through the seminar, David goes through this in all the detail, but your income is basically the rents that you're collecting from the tenants, and any kind of miscellaneous income, late fees, pet fees, anything like that. Expenses are all your operating expenses of the property. Okay, they're everything from your light bill, your repair bills, your make ready costs, your telephone bills, whatever you have to operate that property, that's in the expenses. Then we need to take the difference between those two, and it's called net operating income. And that is what the value of real estate commercially is based on, okay, is your net operating income. Again, David will go over that this weekend. So you're basically have net income of net operating income of almost 9,600 a month, but it says your annual monthly cash flow is $4,500 a month. What's the difference between net operating income and monthly cash flow?
So after that, you got to pay the taxes and the insurance and everything else. So when you take all that out, then your net, what you're left with is 4,500 per month.
Okay, I think the taxes and insurance are actually in the expenses. I think what's below that is actually your bank note, right?
Sorry, yeah, that's what. Sorry, mortgage. Actually, mortgage. I'm sorry. Yeah.
Yeah, your mortgage and your basically your mortgage is below that line, your net operating income.
Right.
So that's the difference between your net operating income and your monthly cash flow.
Correct.
So monthly cash flow is free and clear, meaning this is how much you're going to make every month, right?
Right.
Okay. So over the past year, you've made 54,000.
54,000, yes, for 2021.
Very good. So 54,000 divided by your initial 300,000 that you contributed. So that's an 18+% return, cash on cash.
For
Right?
2021.
Very good. Awesome. And then how much over the years have you distributed to yourself?
Well, it's an IRO deal, so it's in the bank. Whenever I want, it's mine.
Right. So again, the difference between if I have a partnership or a syndication and an individual owner is all this money is in the bank. He can take out as much of that bank account as he wants. And then if he has a cash call to himself, like something happened he wasn't expecting, he could put money back into that account. He can go both ways. Again, he doesn't have to answer to anything. But as far as the evaluation is concerned, income, expenses, operating expenses gives your net operating income. That's what the value of your property is going to be worth. And we're going to go over that in just a minute. Minus your debt coverage gives you your monthly cash flow, which is free and clear. So he's operating right now. He's making over an 18% return for 2021, and I think 2021 was a pretty tough year, if I recall correctly, for collecting rents and things, wasn't it?
Yeah, it was, because of the COVID and the CARES Act, the situation came in that we were not allowed to evict, but this was a bank property. So I was at least go to the court and allowed to evict. But later on, what happened, the courts also got shut down. So for a couple of months, like I had setbacks with a couple of tenants, which I was not able to do anything. But
Okay.
then this Texas rent relief came. They also helped us out a little bit in that.
Handouts.
Yeah. But here's the funny thing, David, on the government handouts, they're actually coming back and making sure that the tenant got it, get credit for it. If they didn't, they're taking it back. It's crazy. They're coming back for it.
But
Yeah, they're coming back. They're coming back to me. I evicted a tenant when he was on that. He was supposed to get paid, and they paid later when he was evicted. So they come back to me. We talk to them.
Exactly.
But what I want the people to hear that are out there watching for the first time is they hear all these horror stories, but this is reality. Is there's all these protections in place which mitigated our risks. So even during the worst economy ever, he still ended up in the bottom line of making an 18% return. Now, you see how excited he is. Like I told you how excited he would be on an 18% return. Now, because he's doing it correctly the way that I teach, how much taxes is he paying on this income? How much is he paying, Lee?
On this, he's probably not paying much.
It's probably zero because we have depreciation. So you'll learn that this weekend, but I want people listening. It would be like investing in a bond yielding 18% return a year tax-free. Who'd be in for that? I mean, that's amazing. I mean, great job, Ashok. That's awesome.
Yeah, that's awesome. All right. So the other thing I want to bring up here that, again, for people that are new, that are very nervous about investing, real estate, being around lifestyles, is during this whole time, we still had meetings among the group of leads and the group of people who own property. And Ashok was there every single time. And we're talking about, what do we do with this? What do we do when the courts don't let you evict? What do you do when these people come? I mean, all that. So we have such a background for each other that we help each other. And there is really no question that can't be asked that someone in the area doesn't know or hasn't gone through that. So he did that as well. Okay, so we talked about current evaluation. So we didn't talk about current evaluation. I told you that your net operating income is kind of the basis for the valuation of a property. So we'll get into this a little bit later, and then David will definitely go into detail in the 2-day. But the value of your property is based on your net operating income. So you take that, if you look at the net operating income, we made $115,000 in 2021. We take that divided by what we call a cap rate, okay, which is just a way of evaluating the worth of a property. It's kind of like an interest rate. of 6.5. You take the 115,000 divided by 6.5. That comes out to about $1.77 million. Okay. Now, what did you purchase this for?
So it was 1 million and something.
So you
One-
purchased it for $1 million. Now it's worth over 700,000 more. So that's what's happened in the last year, our last 4 years, right? 4 years, 22, 18. So the last 4 years, we made $700,000, right? So take 700,000 divided by 4. That's how much growth you've had every year. So that's amazing. All right, very cool. All right, kudos. Be excited, Ashok. Come on.
Thanks.
All right. Very cool. All right, so let's see what the couple pictures of what the property looks like. Okay. So talk us through. These are exteriors, right?
Yes.
These are interiors. Okay, so is there before and after? I mean, how much did you do anything to this property?
Well, what I did mostly was, I had a budget of about 40,000 of rehab. So I found that when I started managing it, I said that I looked at all the details and everything. I'm an engineer, so I went up to the roof, looked at all the ACs and everything else. I checked it out myself with a vendor, and I realized that I don't have to put in all that money all of a sudden. What I thought was I could do it from my operational budget, and basically, so I renewed quite a few ACs over a period, hot water heaters, ACs, electricals, and things like that. And then inside the apartments, outside I didn't have to do it. Outside was generally okay. That's you, handsome Lee out there.
Yeah.
Thank you for that. You were there for that when we did the lease file audit. Sorry, when we did the property checkup.
Yeah.
So yeah, so that was so I did look at things, and then I didn't spend that rehab budget and I operated. And then inside the apartments, like I did basically upgrades. All the carpets and all were removed, and the countertops and the tiles. So that was mainly all the upgrades were done inside the apartments.
Well, when you said upgrade, you replaced the carpet. That's not really an upgrade unless you change the color. And then the countertops and stuff, did you just kind of resurface those or what?
Yes, yes.
Okay.
We have resurfaced this, and then carpets. I changed them to the tiles. They were originally carpets. I
Okay.
changed where the complete apartment. I changed it to tiles.
Okay. So just for people to understand, when you go in and you completely renovate apartments, you change out all the ACs, the electrical, you put new roofs, you paint, you do the exterior wood rot on the interiors, you replace all the flooring, probably all new appliance packages. You might go from a resurface type countertop to maybe a granite or something like that. But basically, what Ashok did was he replaced an AC here and there. He replaced a water heater here or there. I think there was an electrical panel. Interior upgrade, he just kind of did new flooring and did a new resurface job. So it really wasn't a ton of work that he actually did. And I'm not saying that derogatory. I'm saying where he understood what he had and he looked at the rents in the area and understood there's no way I'm going to go do all this work to this place and my rents will not compensate, or I can't raise the rents enough to make it worthwhile. So we have a lot of things when we go over the mentoring side and when we teach inside the seminar rooms on the multifamily, we always say, do not over engineer your product. Know where you're at, know what your community is, know what those rents are. But there's no way he's going to go into LaMarque, Texas, in this particular unit complex and put granite countertops, tile floors, and upgraded appliance packages and things like that. It's just you will never get enough rent to make that work. So kudos for that in doing that, Ashok, and recognizing that. Obviously, from an engineering standpoint, you were definitely attention to detail, so you got that. So that's kudos to you.
Yeah, that was the main thing. That was the main thing, Lee, because I realized that I looked around in the area and the kind of apartments, like the kind of apartments were there. And my apartment was one of the best apartments around. So I mean, even
as
if I
it
didn't
was,
do
it was
anything,
the best as it was.
as it was. So I didn't have to, when I looked around, I saw a few apartments here and there. I said, there's no point putting a lot of money into it. And if I'm not going to get a rent bump of $200 or something like that, so I said, pointless. I could get the rent anyway. So I just had to do basically these like flooring and paint it and just make it nice. And basically it's a C-class submarket out there,
Yeah,
So
very good. Go ahead.
for new people, I want you to understand this. This is workforce housing, guys. It's clean, it's functional. That's all we have to do. you don't have to, and Lee's bringing it up, is you don't over upgrade for the area. And when they talk C class, hey, it's like a letter grade, A, B, C, D. C class people, average. That's what we're doing. So, and Lee, a little bit of advice, you know, if you're going to take a picture, smile.
Hey, there has been many of people that have accused me of not actually working at this place, and I'm like, there's proof. I was out there, baby.
You're out there, and that's another thing. Is this, you know, people always say, well, what will a mentor do? The mentors literally will hold your hand. They will go out these properties with you and walk them and look at those properties with you. It makes you, you know, gives you more confidence of having somebody who's bought a bunch of properties before you walking that property with you. And that's what I love about having a mentor. My first mentor did the same thing with me.
Right.
No, but
And a
this
little
was actually Lee. This picture was clicked when Lee was trying to tell somebody he was not doing his job. So Lee was actually doing the mentoring job right way.
Okay, so go back one slide. I'm sorry. I gotta get this point in. All right. So when we do go out and do a due diligence, we bring other lifestyle members in to help us so they can learn the process as well. And 9 times out of 10, these are people that have never even set foot on an apartment community before. So it's like herding cats. And sometimes we get a little irritable. I'll be, you know, a little testy, saying, "Do what I told you to do, and let's go." So kudos. I also want to reiterate that Ashok bought this from another lifestyle member. So when he didn't have to go in and do a ton, the other lifestyle member was actually operating it pretty efficient and had done some things to it. So it also made the transaction a lot easier, which does help as well. So
Yes,
very good.
you get it does. I was able to get a lot of information from him, which was very helpful.
Very good. All right, next slide, please. All right, so we talk about cash flow and cash on cash projections. So what we're talking about is there's 2021. These were the numbers that actually hit as far as the income, the operating expense, and that's that net operating income that we were talking about. And then you minus out the mortgage, you get the net cash flow, and then your cash on cash returns. So his projections going forward from 22 to 23, you're seeing the net income going up, and that all that means is collections are going up, and it means you're anticipating raising rents, right?
Yes.
Okay. How much do you think your rents are currently undervalued, or do you think they're right in line, or what?
I would say they're more or less in line, a little bit maybe down. So right now I'm full. Actually, I just got one apartment empty, so it's time to raise. Every time somebody leaves there or I sign a new lease, then I bring it either 25 bucks or 50 bucks a month, basically raise it.
Right. So just FYI, to anybody who's listening, we myself and Rand, our operation consultants, went around and we looked at some properties for the expo that's coming up. If you guys want to go to the expo, you'll see some of these properties. Well, every single property we went to, they were all touting, "Oh, we're full. We're 94. We're 98%. We don't have anything to show." And we were like looking at them going, "Well, your rents are not high enough, right? You need to raise rents by definition." And every single property we went to, and I'm going to throw Ashok's in there as well, is if you're 100% full, don't be afraid. I mean, we do like $25 a month or $25 a month increases as like nuisance raises. That's kind of on renewal so they don't move out. But if you're leasing a new apartment, I mean, go for $100 more and just make them say no. I think you're going to see right now in our industry and where we're at in our economy, you can't raise rents fast enough. It is truly crazy. And especially for owners that own their own stuff or that have had a property for a while, it's very tentative to try to move rents at a rapid pace or you know, you're just behind. So I'll challenge you to just raise it 75, 80 bucks on your next renewal. I'm pretty much sure you'll get that.
I don't like to work too much.
I know.
So it's okay, I can get it.
Okay.
Yeah,
so based
right.
on that,
Right.
and also see that your operating expenses are going up. You're projecting them to go up in the next couple of years, and that's I'll just tell everybody that's primarily due to your income, your property taxes going up, our insurance rates are going up, our payroll costs are going up. Everything's freaking going up. So you obviously will manage that going forward as well. But and you're still projecting, you know, 22% going. That's still freaking amazing going forward. So, and that's not working too much, right?
No. Now it's really nice. I go to the property maybe once a month or something, or maybe twice a month at the maximum.
Well, you got to have something to do, right?
Right.
Exactly. All right,
Then
cool.
they need to know who the landlord is.
Very good. All right, so keep an eye on that net operating income. We're going to go to this next slide. So remember, I took that same net operating income, and remember that we talked about earlier how you derive the property or the value of a property is based on its net operating income. So the property value purchased at $1,050,000. We used the same cap rate going forward. So in 2021, it's worth 1.7, 1.8 million. So again, that's a $700,000 increase in, actually that's 3 years, right? That was 2021 numbers. So that's a 3-year gain of over 700,000 already. So that's crazy. Now he's still got his debt payoff. So if he were to sell it at 1.7 million, he'd have to pay off the debt. And we also put on there his original capital was 300,000. Any distributions during the year or that he took out of the bank account, and then basically the total equity that's left would be like, it's crazy, 788,000 is what it would be worth, or his net investment would be in 2021. So remember, how much did you invested 300,000, right? So
Right.
over just those 3 years, your actual net equity gain in 3 years was like 265% above your original investment. So that's freaking nuts. Kudos, man. Smile at least. Give me something. Very cool.
You bet. Yes, that's right.
When the student makes over 100% return, what is the technical term in the industry? Did you learn it yet? You won't
The
say
teacher got to smile.
it. In your pants, exciting. I mean, this is awesome. I mean, great job. You know, you really are doing and the point of what Lee was saying is great. So he did this by himself. He invested 300 grand. He's turning in over 900 grand after his 300 grand, right?
Yep.
So it doesn't matter if this was a syndicated deal and you were an investor from California, you could have put in 50K, 25K, 100K, 265% return. I mean, that's what it would be. So my point is there's lots of ways to do these same deals, but the point is you're not making this kind of money in the stock market. Do you like this better than your stock portfolio right now, Ashok? Because I know you said you did a lot of that before.
Yeah, but this is definitely better than that.
Okay. Very good. And just, I mean, the problem is that Ashok is greedy and he wanted it all to himself, so he didn't let anybody else invest with him. So
that's okay.
Well, no, not really. I was not sure that I'll be able to do it. And I knew one thing: if something happened, I could afford to lose $1 million. That would be the case. So that's why I didn't take it. I didn't take it.
Okay.
I love this because no, he was just being cautious. He says, I don't want to risk other people's money. I don't mind risking my own money. We have a lot of members do that. They're like, I'll get investors maybe later, but right now it's my money. I'm in control. I'm not taking other people's money. I love that. That's what conservative people do. So there's nothing wrong with that.
Yeah, and I agree 100%. My very first deal I did was the exact same thing. I was like, I was nervous, and you just don't know if you can do it. But I mean, telling you that real estate is so dang forgiving, you could be a complete moron and you'll still make money. I mean, and sometimes they even make you a mentor. So it's crazy how that works. So kudos.
No, but that is true. When the day I signed the papers, I realized that now I own the shit. I said, now what do I do? So it is, and you get first month was very tough, but then one of the programs like mentors and then fellow members and this that they help you and they build you confidence. And one of the main reason when I went for this deal was because it was $1 million deal. I said, okay, if something happens, whatever it is, I run it down or whatever, I'll lose $300,000 and I'll be done. But I have one experience, so I went for it.
Very good. So you can do that as a syndication too, sir. You can take other people's money. You can help other people do that as well if you want.
Well, if I do syndication, they'll kick me out.
Because you don't want to work that hard. I definitely understand that. All right, cool. All right. Well, again, we're looking at your projections going forward. So your 780,000 can be 860 next year, it can be 900 the next year. It's crazy. As long as your net operating income continues to increase, the value of your property will continue to increase. And again, David will go over that this weekend. So again,
and in this one, Lee, I'm not allowed for refinance. If I keep the property, then I do plan, I'll refinance it now. I mean, I can get a much better rate right now to refinance, and
Yep.
my numbers will be a lot better if I do it right now. And
Exactly.
I've not been able to decide basically what to do right.
And for you people listening for the first time, if he decides to refinance it, he put 300,000 into it. He might be able to pull $500,000 out of it. And how much taxes would he pay on that, Lee?
Zero.
Zero. He'd pull all his money out and then some and pay no taxes. God bless the IRS. God bless America.
Very good. All right. So next slide. So how on earth did you achieve this?
So as I was talking, when I joined Lifestyle and I read, I mean, I spent a lot of time going through the Lifestyle library and reading about it, and from A to Z, and then I got my lead certification also through that. So when I read about it, that's one of the best. The backbone of Lifestyle is the education program, the operational support, and you go through the case studies and road trips and the fellow members. This is one like association where everybody is open with each other. What are my numbers? What is his number? And people tell you openly, which you will not find anywhere else. Nobody will tell you, even like in family in this, that what I make or what you make, nobody tells each other. But out here in Lifestyle, I found that was one of the best things. Originally, I didn't, when I joined, I was not sure if these numbers are correct or not correct, but then you got to know the people and you understood, and you are passive in deals, and so then you find out. So that was one of the best thing I found in Lifestyle. I mean, when I attended 2 day seminar, I was not very sure that I wanted to be here or would I wanted to be there. But then when I joined and I started meeting with folks and I became a lead, I mean, I became IRO myself. So it was a very good learning curve, and plus the support, like mentors and operational support from Randa and everybody else. So anytime you call, that's helped me a lot to get to where I am today.
Yeah, I'm going to reiterate that because it really, I mean, all of us were sitting in those seats or we were on the other side before we joined. But it's truly amazing when you join and you talk to other fellow investors, and literally all of us are like, well, what do you need or what are you doing? They're like, well, how much did you make on this? Here it is. This is how much we made. Or how much did that cost you? Here it is. I mean, it's so open and everybody's just, it's crazy how sometimes it's too open, I think. But, everybody's sharing and they're sharing their successes, they're sharing their challenges. It's just crazy how that works. One other thing that I want to always point out that the only way you really achieve this is you actually purchase the real estate. I mean, if you would have sat there and analyzed it for another 6 years or, gone back and forth, there's always a reason not to buy. But the hardest thing to do is to buy that first deal. And once you buy that first deal, then the second one is even easier. The next one's even easier than that. So I was actually having lunch with another member today. I was like, they made like a killing on their first single family house. And I'm like, kudos. And the way you achieve that is you freaking bought it. If you don't buy it, if you don't get off the couch and buy stuff, you're not going to be able to do it. So, and that's sometimes a very hard thing to get over. But the mentors will help you as well get over that anxiety. But again, the more case studies you come to, the more road trips you come to, the more members that you talk to, and you sit next to those seats right next to somebody else that's done what you're doing, it kind of gives you the confidence, at least the knowledge that someone's behind you and going to help you there so you can go there and help. So kudos. All right. So what's next for you?
Oh, time to go to bed.
First of all, how did the lifestyles change your life? I got to go with that first.
Well, the short-term goals, I'm in right now, not sure at the moment, other than basically to manage investments. Last couple of years have not been able to travel much and enjoy life in that sense. So I plan to do that, and I need to decide what I want to do with the property. It just basically, I plan to be just mainly passive going forward. That's my basically goal is long
Okay,
term.
I don't think we really talked about that, but I want to drop that too. We have these things called passive members, which are kind of other members that invest. We have these things called lead investors, which are the people that put together syndication and purchase the deals. And then we have IROs, which are people that buy their own deals. So just like Ashok said, that he doesn't do a whole lot on this property now, which is good. That is only because it's not a syndication. He doesn't have partners. If he were a lead and had partners, he would be filling out reports. He'd be at that property. He'd be managing the third-party management company if he didn't manage himself. A lead position is a job. It is not the quote-unquote lifestyle that we're trying to get to. Where you're at right now is you're actually like, do I want to get rid of this stuff and throw my money with all these other people to invest in real estate and let them worry about it? And then I enjoy the lifestyle, which is sitting on your couch, traveling, doing the MS 150, being with your wife, kids, whatever you want to do. That's so you're basically deciding what you want to do the rest of your life when you grow up. Is that what you're doing right now?
Yes, that is true. I'm in the process this year. Actually, I am in the process of doing. I mean, I sold all my single family homes. I sold my land and everything else, whatever was there. So I sold all that, and now I'm left with this property, which I need to do. And then basically, that's what I'm in the process.
Very good. Kudos. Congrats. All right. So I think we have, oh, who's on your team?
So I started with Curtis originally when I was doing the deal, and then of course it was you who helped me out a lot.
You
Uh,
upgraded a little bit, right? I'm just
Sorry?
kidding. You upgraded a little bit, right?
Yes, I did upgrade. Yes,
I'm kidding.
yes. So and then Randa was, of course, Randa has always been a great help in operations matter. Anytime we basically call her or send her an email, and she's really great help. And she's got so much experience, and you just throw the problem to her, and she tells you, I mean, what document you need to do. She'll send it to you that, okay, do this, find yourself, and this, that sometimes you're not able to find on the, the red book and this, that. She'll send it to you. So Randa is a great help to operate. And then when I bought the property, I started with actually Joe, but then Joe quit during the deal, and then I got Chuck, and I think Dinah was Eric's agent, but she helped me out also quite a bit. We worked together this, and of course, fellow members and the leads, everybody. And then we have like Texas City, we have quite a few owners in Texas City, so we have our own like group, and we meet. We have our WhatsApp group where we just throw in, hey, I need help, and people throw, and then we sit down once a month for lunch out there, so we exchange idea. And so it's a great help. Anytime we keep getting messages among our group on WhatsApp, that, hey, I need this, I need that, and the information. And most of them are 10 units, 20 units, 50 units. So it's we don't have that kind of resources which other people like 100-unit people have, like a full team. Like they have a maintenance team, manager. Out here we are doing ourselves most of the things. So the vendors and things like that. So it's very helpful to have all the lifestyle people out there in Texas City area who are member team.
Yeah, perfect. And I didn't realize, I didn't mention that earlier, but there are a lot of people that we all get together as a group and talk. But there are subgroups, like just in your area, you get to be friends and you get to be knowledgeable of other owners that own just right in your neck of the woods. And we have multiple of those groups, and we all get together, depending on which group you're in, or if you're in multiple groups. Like you said, they share things like, I'm looking for this, who's the best person for that. We'll get together and have lunch once a month, or maybe go to a person's property and like tell us what's wrong with the property, put new eyes on it, what things can I improve. And that's another huge benefit that you just don't get by, if you got like 5 gas stations on a corner, they're all not talking to each other at all. They're like cutthroat competing against each other.
Yeah, that's a very big benefit out there, because we even refer tenants. If I'm full, somebody comes to me, I tell the guy, hey, do you need? I'll send him to somebody else, or somebody else will send it to me. We talk among ourselves. How are the rents? Are you have anything available? How are the rents? Are you increasing? What is the rate? So we get a lot of information among ourselves, which gives us the information to do what we need to do at our property.
Very good. Awesome. Okay. Next slide. I think we got some time for some questions, maybe. No.
Yeah. So Lee went out, walked the property, also took some selfies. He did a lot of work. He did a lot of work.
Selfie that was taken by me.
Thank you. I did a ton of work out there, I'm telling you.
Actually did a lot of work walking the property. How much did you have to pay Lee out of the deal? What cut of the deal did he get?
We have a new person asking, Ashok, how much did you have to pay Lee to do this?
Yeah.
You're talking on the side, or you're talking officially?
Point is, folks listening, just so you know, because they'll probably make jokes and then people read into it. Once you join our program, you get the mentors. You can use them as much as you want, unlimited. It doesn't cost any extra to use the mentors.
Right. Yeah,
That's the best part of the program, that the mentors are the best part. You get so much experience And with that, that's a lot to go by.
Yeah, and remember, even that due diligence that we did, we came out there with other volunteers from Lifestyle, and the companies that you'll pay a third party to do that, they'll charge you thousands of dollars to do that, to walk every unit, to look at the ACs, to look at the roofs. They charge thousands of dollars that. It kind of comes, if you want the Lifestyles people to help you, it's beneficial for other people as well. If they're volunteering, it's like education. They're seeing things because they want to buy sometimes. So kudos.
Right. It's a big education for the volunteers too. I mean, that's how I learned what to look into apartment, what to do, and things like that. You'd go and do, I mean, basically the due diligence.
Yep, exactly. Okay, what else? Nice look, David. Nice look.
Yeah, just one other question. So if you could just bullet fashion, just short answer, what were the primary things that increased the valuation, that increased your NOI? Like raised rent, expenses?
Ashok, what were the main things on your, whether ancillary income or straight rents? What was the main things that pushed NOI?
Well, it was a straight rents. I raised the rent slowly, and rents were not, as in when I was upgrading the units. So basically, I started raising the rents. Rents were below market at the time when I took over some of the units.
Okay. You didn't do any weird things like rubs or, pet fees or something the previous owner didn't take advantage of, or
Well,
reserve parking?
Pet fees I did charge. Pet fees I did charge, yes, but nothing else. I mean, basically,
So it's just simple and just raising those rents. That's what drove it. Okay, good. That's it. Okay. Well, that's all. That's the question we had for tonight. Ashok, what advice would you give for somebody new coming to my seminars first weekend? They've never been involved in apartments, whether they want to invest as a passive or buying their own. What would you give advice to somebody new?
One of the things which I personally like, I analyze a lot. So if you analyze a lot and you do that, it's very rare that you will get into it. So you'll have to take certain amount of risk and understand and go and talk to the people, mentor or members or whatever it is. And you'll need to commit to something in order to do it. Maybe commit to what you can afford to lose or whatever may be. So that way you have a confidence basically in yourself. Not that you need to lose, but I'm just saying.
There. Yeah.
But
Dude,
that
it's not
helps
gambling,
you a lot.
dude. Just buy property. It's going to go up.
Yeah. I like Ashok's whole, he's the skeptic, the way he invests. He's like, worst case scenario, I invest 300K, I risk 300K. If I lost that, okay, I won't do it again. But he turns 300K into 900K. I think that's pretty good. So good job for doing that, Ashok. So I love that. So
Thanks.
all right.